Okay, I decided I'm not going to try to put the pages backwards, so we are going to do our little 5-step of revenue recognition on page 3. So, look back at page 2. Yeah, page 2. At the top are the 5-step process for revenue recognition on page 2. Now, the questions aren't always going to ask for it, and in fact, most of them don't. This step is if you're finding difficulty, and you might only on some of the questions. This one might be really clear. Others you go, okay, what are the deliverables? So I just want to show you how it works. When you do get to the CPA, because this is handbook based for IFRS, you will hear about this and probably be expected to use it. So, step 1 is identify the contract with the customers. So this is going to be your 5-step process. Oh my gosh, why did I use F's? I don't know, these are S's. For revenue recognition. Okay, so number 1, identify the contract. Well, we are Carla Vista is us, has a contract with Tamarask, now what's it for? Part 1 and 2 are kind of related, and it's for goods and services, because you got the warranty. Now this is the really critical part of step 2. What are the performance obligations in the contract? Well, what do we have to give to Tamarask? Well, we have to give them the equipment. So let's put, what do we owe them in the contract? Equipment. What else do we need to give them? Well, the assurance warranty. And what else? What's the other kind of warranty called? Service warranty. So now that's a critical piece, because often you guys, when you're reading questions, especially once you get longer ones, you miss one of these, and so your question will have missed allocating it. So just watch for that. Okay, number 3, we want to know the transaction price. So what is the whole transaction price? Well, we've got the equipment, plus our assurance warranty, and that equals 49. We also have the service type warranty, which was $650. So the total transaction price, oh gosh, I hope I add right. $50. Whoa. As any of you guys have had me before, if any of you, well, probably not, because I don't teach intro. I actually math, but even standing here where I can't see you, I panic a little, and so the math goes right out of my head. And if you ever have me again, or you'll notice it doesn't get easier in hard levels. Okay. So that was step 3, our transaction price. Mostly, we've written down all the things we need. Now, if you wanted to split these two things into the two numbers they gave us, the 1,348.2, then you could do that. So there could be three things here. I wanted to keep it together. One, because that's what they told us, how much it was sold. The other thing, as you'll see in one of the next examples, these numbers kind of change. We might have sold it for $49,500, but really the fair value to sell the equipment was actually $50,000, and the assurance was $1,000. So then you'll end up with a different number when you're calculating step 4. Okay? But don't worry, we'll do an example. You'll see how it follows. Okay, number 4. Allocate the transaction price to the separate performance allegations. So allocate. Now, this is an easy one because if you took the equipment plus the assurance, if you added up what they gave for the estimate of prices, because remember, they don't give the customer a breakdown like this, 48.2 and 1,300. So if I put 48.2 for the equipment and 1,300 for the cost of the warranty, does that up to 5? Add that up to 49.5. Yes, it does. So this is an easy example. The allocation equals the price given. Okay? So if you remember, well, I'll just tell you about it again. When we sold in intro, we sold packages of land, building, and equipment for, one price. But they hardly ever said, oh, and that's exactly the value. Okay? So usually the value of all three was higher or lower. So you couldn't just allocate it, just split up like that with no calculations. Okay? Don't worry, we'll do an example of that. So this is easy. They're just split up the way they listed. Okay, now step 5. Recognize revenue when the obligation is satisfied. Whoops. Okay. So, when is the sale and the assurance going to be satisfied? Well, some is going to be immediate at sale. What do we do with the assurance warranty? Warranty and an expense and liability, like you did in intro, and then an unearned liability for the servant's warranty. Okay? So that's what we're going to do either on the back of the page or if you have an extra page. We're just going to do the entries. Okay. So now we are actually doing the entries for December 31st. because that's when we made the sale. So, put our date. When I'm doing entries where I have to piece things together and figure it out, I try not to start with either debits or credits or, try to always do the same way. Things like, look how much cash, because you guys in this class, you're going to learn a whole bunch of entries. In 316, it's even worse. So if you can focus, now you don't have to memorize anything because this is open book, but eventually you've got to know these all by heart. So what you need to do is think of ways to put all the entries together, because there's no way you can memorize every single entry for the CPA, which they expect you to. So leave some room for some debits and leave some room for some credits. Okay? So what is actually in here? Think physically what's happening. Well, we're giving equipment to Tamarisk and they're giving us money. So we're getting cash. How much cash are we getting? Well, we're getting the $49,500. And what else are they paying us for? The $650, the extra warranty. The service warranty. So the amount of cash we get is 50150. Everybody okay with that? Okay. Now, can we record sales for this 650? No, because we haven't earned it yet. Now, what do we do with the 48,200 plus 1,300? Okay, we can record the full sales of both of these together. So we can record 49,500 because we treat the warranty a little differently. Although we say, hey, we have sales, what do we do with warranties? This is way back. Remember, we set up an expense and a liability. So we're debiting warranty expense for 1,300, and this is from intro. So if you took 311 or 111, 161, and we credit warranty liability, and that's going to be for 1,300 as well. So we did record sales for that assurance warranty, but it was offset by an expense for the warranty, because that's a matching expense. We might not have made the sale if we didn't offer that expense. And then we record a warranty liability to match that. So, are we done? And let's just take a little step, a little reminder to write this down. The warranty expense matches the cost of the warranty with revenue. Okay, so this takes care of our warranty, but it's still not balanced. We're missing $650. Well, have we received that money? Yep. It's up here. Have we earned it yet? When's it going to take place? When are we going to be earning that? Well, it was for 2022 and 2023. So what do we do with money we got we haven't earned yet? It's unearned. Warranty revenue for $650. So just to remind you, got paid in advance for work to be done. That's why we record it. Okay? So, everybody good? Okay, what I want to do, even though it didn't ask for it, I just want to show you what the entries in the future would be. So, let's say in 2021, yes, we're still using the assurance warranty. They bring in the equipment on the assurance warranty for work. Then, and this you learned last year, we take it out of warranty liability. So we reduce the warranty liability, whoops, for, let's say it was for $200. Let's say it's for labor. So we reduce the warranty liability, and we credit wages or cash or something for $200. Okay, so that a year after December 2020. So that's 2021. But now if we put 2022, and they bring in equipment for service, it's a little bit different. So, in that case, we're going to take this unearned and show we've earned some of it. Let's say it's for $300 worth of stuff. So, we debit the unearned revenue. And we credit, what? Have we just earned some money? Earned some sales? Yeah. So warranty revenue for $300. So that shows that we took some of this unearned and now we've earned it and turned it into revenue. But we also have to record that we had warranty expense, because this warranty expense was only for this $1,300. We don't have a warranty expense for the unearned or the service warranty. So also, we're going to debit service warranty expense and credit, what did we bring it in for? Service wages or something. If it needed parts, something like that. And it would be $300. Now, if the questions were specific, wages were $200, parts were $100, you have to split it up. But a lot of times with warranty questions, they'll just combine them. Wages, parts, whatever. Okay? But watch what accounts they give you in case you need to split it up. Okay. So, that was the example. And I'll recap it just at the beginning of the next video before we go to example 2. Hopefully that makes sense. Okay.